Oil prices slid below $55 for the first time in more than 5 years on Tuesday. So can a bottom finally be found? I'm joined by Dan Dicker, senior energy contributor at TheStreet. Dan, why is this bottom so hard to find?
Well, basically this is a market, Brittany, that breeds sellers as it goes lower. That's very difficult for a lot of people to believe that you can actually be constructive on oil when it trades around $80 or $85. But as it slides below 70 and then below 60, it seems to look worse and worse. And part of the reason for that is that you have a lot of the commercial players in the energy market, those E&Ps that are producing oil, who are looking at prices that are going lower and finding more reasons to sell it, hedge out production further into the future. In other words, if you are an oil company and you're staring at a price of $85, you're not so worried about what kind of profits you're going to make in 2015 or 2016. But if you're staring at prices below $60, now you're petrified that you may not be able to survive 2015, much less 2016. So you're forced to hedge production into a market that's going down. In other words, add selling into a market that already has pressure. And that is something that we've seen here. Very, very tough to find bottoms here, particularly with the dollar continuing to rally against other currencies.
Right. So what do we need to see to finally start to believe that a bottom is forming?
Right. What I need to see, and what I think I need to see, is some serious and concrete numbers that, in fact, production here in the United States and elsewhere is dropping based on lower oil prices. What we've seen so far is a lot of reports, a lot of smoke, I think, from a lot of the oil companies, that they are going to cut the spends that they're doing for 2015 and 2016. They're not going to invest as much money in drilling as they have in the past. But what they haven't admitted to is a lessening of production, because that's the one bugaboo that every oil company doesn't want to admit to, and that is cutting back on production numbers. It's going to happen anyway, whether they admit to it or not. And I think it's going to happen a lot quicker than most people think. But so far, the EIA, or at least our agencies, are looking in the rearview mirror. They're expecting increased production for 2015. I don't think they're going to get it, but you need to have a concrete number that they're not going to get it before I think oil prices will have found a bottom.
So $1 million question, how low can they really go?
Again, I mean, I've never been, I haven't been a seller of oil anywhere down here. I also haven't been a buyer. But the reason I haven't been a seller is because these numbers are unsustainable. Global demand keeps on going up, but production is going to drop here. At some point, we are going to have a supply shortage that's going to emerge if prices stay down here. So it's very difficult to sell. Again, though, almost impossible to buy until we see a hard number of some production cuts, or we get some mergers or outright bankruptcies on some of these smaller oil producers. So for right now, no positions in oil, also no bottom calling, but also don't want to be buying here. Very much a run for the hills, hide under a rock kind of stance for me right now to the end of the year.
And wait and see. All right, thank you so much, senior energy contributor Dan Dicker. And I'm Brittany Umar for TheStreet.